myself Aditya P. Tripathi. I am once again here with you to continue our discussion on the numerical problems of statement of cash flow. This is going to be part 5 of our lecture series on statement of cash flows, and in this series I would actually be taking up a specific problem which is related to treatment of interim dividend. Because at times, we are provided with some information regarding interim dividend, and we have some doubts that how to provide for this interim dividend into our statement of cash flow, how to pass an entry for it into our statement of cash flow. No doubt that this payment of dividend belongs to the activity called financing activity, because you have collected funds from shareholders and you have to pay dividend to them. So just like proposed dividend, interim dividend also finds place under the head of financing activity. But the question comes, sir, when we have final dividend for equity shares, preference shares, and then in addition to that we have interim dividend also, how to deal with this kind of situation where we have multiple nomenclatures for dividend, when we have multiple items which are related to dividend. So I shall actually be telling you, I shall actually be clarifying you the different aspects of dividend and how to treat them into the statement of cash flow. That would actually be our point of discussion today. In addition to that, I shall also be taking up this question, a question where I shall be telling you how to treat the sale of fixed assets when you are selling out of fixed assets, and in your question, apart from providing the value of asset, they do provide you accumulated depreciation account for that. So when you have provision for depreciation account or when you have accumulated depreciation account, how to deal with the sale of fixed assets, that is another point of concern for you when you are dealing with the question of statement of cash flow. So with this twin agenda of interim dividend and accumulated depreciation account, I shall be showing you a numerical problem where you would understand how to deal with such kind of situation. But before going ahead, we should know what is interim dividend. You all know what is dividend. Dividend is something which is divided at the end. It is a synthesis of two words. One is divide, another is end. So whatever you divide at the end of the financial year among the stakeholders, that is called shareholders, that is called dividend. And for equity shareholders, you have to pay dividend, although it is not an obligation at all. If company feels that dividend has to be paid, dividend may be paid, and it is supposed to be proposed by the board of directors, the board in the AGM, that is annual general meeting, and eventually what happens, the equity shareholders, they approve that specific rate of dividend at which the company is planning to pay dividend. That is called, so whatever is proposed, that becomes the final dividend. So there is no doubt in proposed dividend and final dividend. But do remember that proposed dividend is something which is to be paid in the next financial year, because normally your balance sheet is audited after 31st March, that is end of the financial year, and after that audit and all, there is an AGM, that is annual general meeting, in which the decision is taken. So we assume that whatever has been proposed in the previous financial year, in an obvious manner, it must have been paid in the current financial year. So even if the question is silent about the payment of proposed dividend, we have an established understanding, or this is considered to be an obvious treatment of proposed dividend, that whatever has been proposed in the previous year must have been paid in the current year. So there is no doubt, absolutely no point of doubt for the treatment of proposed dividend. Whenever you find proposed dividend in the balance sheet, do remember the proposed dividend of previous year has to be shown as payment, has to be shown as cash outflow under the head of financing activity in the current year, and whatever has been proposed in the current year, that would be shown in the statement of cash flow of the forthcoming year. Now the second point comes for the dividend on preference shares. Remember, it's an obligation if it is of cumulative nature. If it is of cumulative nature, whether company is having profit or not, suppose if in some year company is not having profit, in the subsequent year, whenever the company books profit, they are supposed to be, the preference shareholders are supposed to be paid the preference dividend at the specific rate, which is already mentioned as a prefix to the category of preference shareholders, like 10% preference shares, 12% preference shares, and so on. So for preference dividend, there is no doubt, again it is shown as a cash outflow, and at the head of financing activity we have to show it as a payment. Now the third category of dividend which comes to us is interim dividend. And you have this doubt in your mind how to treat with this interim dividend, how to treat this into our books of records. There are certain precautions which you have to take while dealing with the interim dividend. Point number one is you should know what is interim dividend. as the term itself is indicating, the dividend which is paid between the two terms, that is called as interim dividend. So the name of interim dividend has been assigned to it due to its very nature, that between the two dates of AGMs, when company is planning that we are going to come up with a public issue, and you wish to create a positive atmosphere about the company in the market, or you are hopeful about the future profit, that in future the company will definitely make book a significant amount of profit, company may go on to declare interim dividend as an interim relief, as an interim motivation to the shareholders that yes, company is making good profit, and that is why we have got this interim dividend. So interim dividend should be clear to you, but do remember it is actually part of final dividend. Suppose if company says that the total dividend which is to be declared on equity shares is 10%. So do remember we have to calculate 10% of face value, and whatever you have paid previously in terms of interim dividend, that has to be excluded from the payment of final dividend. So we have to remember that interim dividend is actually part of your final dividend. So unless question mentions categorically that yes, interim dividend is over and above the final dividend, or you can say the final dividend is a net amount which is to be paid, it is not in terms of percentage, then you need not to pay any attention to that, or you can show both the payments, interim dividend and final dividend. Amount may be more than the percentage given, in case question clearly says that yes, interim dividend is not part of this final dividend. So you have to actually be very vigilant while reading the question, while reading the problem, that whether question is saying that interim dividend is included, interim dividend is part of that final dividend. If it is so, suppose if question says that a total dividend of say 10 lakh rupees was supposed to be paid to the shareholders, out of which 2 lakh rupees have already been paid as interim dividend. So your total payment has to be shown as 10 lakh rupees. Which means 8 lakh rupees as final dividend and 2 lakh rupees as interim dividend you have to show under the head of financing activity as cash outflow. Some students, what they do, they take up 2 lakh rupees as interim dividend and additionally final dividend of 10 lakh rupees, booking a total amount of 12 lakh rupees, which is wrong. So you have to first draw the inference out of the language, the way it is written, what question wants to say, what problem wants to say, that we need to understand while dealing with the treatment of interim dividend. So first is where to show it. So there is no doubt about it, you have to show it under the head of financing activity as cash outflow. Second is there any treatment of this interim dividend while doing the calculation for cash flow from operating activities? Answer is yes, provided the profit with which you have started have been arrived after paying that interim dividend or after showing that interim dividend. So to conclude, I would say the amount of interim dividend which is paid during the year is shown as cash outflow under the head of financing activity. And do remember, it is a transaction which belongs to financing activities under the cash flow out of 3 activities, that is operating, investing and financing. And do remember that it should be added back to the reported profit while arriving at cash flows from operations. So when you are calculating your cash flow from operating activities and you start up with the profit after tax, do remember you have to nullify the impact of non-cash and non-operating item. So this item falls in the category of non-operating item because it belongs to financing activity. So payment of interim dividend, if it is shown in the profit and loss account and you start your journey of statement of cash flow from the profit after tax, so do remember that you have to nullify the impact of interim dividend as well. So in addition to adding back the value of proposed dividend, you are supposed to add back the value of interim dividend as well. But yes, you have to be very cautious. If question says that this net profit is before apportionment of interim dividend, then in that case no adjustment is required under cash flow from operating activities. Because normally what happens, you get accustomed to adding back the amount of proposed dividend and interim dividend. Don't do so. Just read the question properly and draw inference out of it whether the profit has been arrived after apportionment of interim dividend or before interim dividend. If it is before interim dividend, then obviously since you have not subtracted it, what is the point of adding it back? So nullification means if you have subtracted, you have to add it back. If you have added, you have to subtract it from the profit which you have taken for the calculation of cash flow from operating activities. So this is a minor suggestion to, this is a small suggestion to you, that whenever you find presence of interim dividend in a practical question, you have to be a little cautious that you are supposed to show both of them, interim dividend as well as the final dividend. Now we will be taking a numerical question, and we shall learn how to deal with this problem of interim dividend. So there is a question, there is a balance sheet provided by a company called LK Limited, and it is providing you the balance sheet for 2 consecutive periods ending on 31st March 2020 and 31st March 2021. So this is the balance sheet given by the company, and if you look at the balance sheet, on the left hand side, it's a traditional T-shaped balance sheet. On the left hand side we have equity and liabilities, and on the right hand side we have assets. Do remember that while attempting the question of statement of cash flow, normally we are accustomed to reading the value from left to right, that the first column must be 2020 and second column must be 2021. Here it is reverse. The first column of amounts belongs to 31st March 2021, second one is of 2020. So if you wish to know the movement, say for instance I take share capital, so in 2021 the value is 4 lakh rupees and in 2020 it was 3 lakh rupees. If you go with this perception that the first column belongs to the first year and second column belongs to the subsequent year, you may identify it as a downfall, as a reduction in the value of share capital, which is not so. So you have to understand that from 3 lakh rupees to 4 lakh rupees there is an increment into your equity share capital, which must have been due to the issue of share capital, that we shall discuss further when I will be going through the working notes. I'll tell you how to deal with this share capital, but as of now, in this, in first glance, I would say that yes, it is an increment in the value of share capital. So company must have gone for issuing equity share, fresh equity, and this 1 lakh rupees is an addition, it's a cash inflow under the head of financing activity. Now, if I move on to the other items, we have capital reserve. Earlier there was no capital reserve. Now in this year it is 10,000 rupees. There was a general reserve of 50,000 rupees in 2020, and in 2021 it has become 65,000, which means from profit and loss account there is a transfer of 15,000 rupees to general reserve, which is again a non-cash item that need to be nullified while calculating the cash flow from operating activities. Profit and loss account, earlier it was 1,70,000 in 2020 and now it is 2 lakh rupees, which means there is an increment of profit to the extent of rupees 30,000. Provision for taxation, earlier it was 90,000, now it has become 80,000. Proposed dividend, it was 36,000 earlier, now it is 48,000, and current liability there is an increment of rupees 10,000. So in this way, my dear learners, we have to monitor the movement in the value of items from one year to another, whether it is increasing or decreasing, and then we shall draw inference out of it with the help of additional information that how to deal with them under the different activities of statement of cash flow. If you look at the asset side, fixed assets, earlier they were 5 lakh rupees, now they have become 6 lakh rupees. They have subtracted accumulated depreciation out of it. Remember, there are two ways to show accumulated depreciation. One is on the asset side, you can subtract it from the asset. Another is you can show it on the liability side as liability. And then you have trade investment. Earlier it was 80,000, it has become 60,000. Inventory, it has increased by 63,000. Debtors, again there is an increment. Bank balance, it was 30,000, now it has become 40,000. And primary expenses, it was 20,000, now it has become 10,000, which means it must have been written off. So it's a intangible asset, preliminary expenses, where there is a downfall to the extent of rupees 10,000. So it would actually be added back to the profit because it's a non-cash item. This expense have already been incurred, and in the current year it is not involving any kind of cash outflow. So this is the way, my dear learners, we have to look at this balance sheet. Now this question is important from two aspects. Let me reiterate. First is the payment of interim dividend, and second is accumulated depreciation. When this is given, how to deal with this situation. First adjustment is that during the year 2021, the company sold one machine for rupees 30,000, and the cost of this machine was rupees 60,000, and depreciation provided on it was rupees 20,000. So we can have an instant working on this, that the value of property was, value of this machine was rupees 60,000. But what is WDV? What is written down value? After subtracting depreciation of rupees 20,000 out of it, the actual value of this machine was actually 40,000, and you have sold it out in 30,000, which means there is a loss of 10,000. So there is an instant clarity that you have sold this machine at rupees 30,000. What is the journal entry? Bank account debit 30,000, profit and loss account debit 10,000, to machinery account, that is rupees 40,000, which means that you have sold out a machine of 40,000 rupees at rupees 30,000. Another point here is sold trade investment at a profit which was credited to capital reserve account. This adjustment will help us when we shall be opening the trade investment account. Whatever profit on investment we have booked, that is supposed to be transferred to capital reserve account, which means it might not have gone to profit and loss account. Otherwise, normally what happens? It goes to profit and loss account. And since it is an investment, the profit could have gone to which activity? It could have gone to investing activity. But here it is saying that this profit has been transferred to capital reserve account. Paid income tax of rupees 88,000 during the year. This will be useful when we shall open provision for taxation account. Paid an interim dividend of rupees 15,000. There is no mention of final dividend. So interim dividend of rupees 15,000. Prepare a statement of cash flow for the year ended 31st March 2021. Before I take up this question, let me here clarify that there is no mention of the rate of final dividend. There is no mention at all regarding the payment of final dividend. Question is saying that interim dividend of rupees 15,000 you have paid, show it as a cash outflow. Point number 1. Number 2, regarding proposed dividend, we are provided in the balance sheet the value of proposed dividend for both the years. So we shall go with the same assumption that proposed dividend of previous year must have been paid in the current year. So with this understanding, we shall now proceed with this question. I always suggest my learners that first we should start with the working notes, open provision for taxation account. As we all know that provision for taxation account belongs to the liability side, and liability is a credit balance. So whatever is the opening balance will be shown on the credit side. Buy balance brought down 90,000 rupees. And the balance of next year will become the closing balance. So we have written it on the left hand side, to balance carried down rupees 80,000. Now we shall search in the question about additional information. Is there any information related to taxation in the question? Is there any additional adjustment or additional information provided in the question? Answer is yes. Question reports that you have paid income tax to the extent of rupees 88,000, which means you must have paid. So I have written here to bank account rupees 88,000. Now there is no other information related to tax given in the question. So what we'll do, we'll make a total of both the sides, and whichever side is having greater value, the other side will have balancing figure. So if we look at the provision for taxation account in the working note on the left hand side, the total comes to be rupees 1,68,000, whereas on the credit side it is only 90,000. So remaining value becomes 78,000. Now this balancing figure of 78,000 could have been transferred, could have been taken from where? This is a credit balance, so from where you could have taken? We have no other option but to credit it from, but to refer it to profit and loss account. Let's see. This could have been the amount we might have taken from profit and loss account. So this 78,000 rupees will be, balancing figure will be shown as an amount, as an apportionment from profit and loss account. That is why we have written here by profit and loss account. Now this 78,000 rupees will be used where? When we shall start calculating cash flow from operating activities, we will have to nullify the impact of non-cash item. 78,000 is a non-cash item. It's an apportionment from profit which we have taken. Whereas this 88,000 rupees is a payment. So that will be shown as a cash outflow under the same head. So 78,000 rupees you will be adding back, and 88,000 rupees we shall be subtracting as the payment of income tax. So this is the first working note of provision for taxation account. Moving ahead, we shall calculate the net profit before tax and extraordinary items. See, there are two ways. Either you do it in the working note, or you can straight away go to the question and do all this calculation in the same question. But I always suggest that you should calculate net profit before tax and extraordinary items in your working note, because that would help you in finding more less number of items to be shown in the mainstream of statement of cash flow, and that would provide a clarity to anyone who is going through the statement of cash flow. So let us start with the balancing figure of net profit as per profit and loss account. In the first year it was 1,70,000, and in the subsequent year it became 2 lakh rupees. So there is an increase of rupees 30,000. So we have taken that 30,000 rupees as a profit. Had it been a decline, it could have been a minus figure, which means the company might have incurred loss. So it can be negative also. It is not compulsory that every time it is positive. It can be negative also. Now what we'll do, we have to nullify the impact of non-operating item. So what we'll do, we'll first add proposed dividend of current year, and in the balance sheet the current year's proposed dividend came to be rupees 48,000. So we have added back the proposed dividend of current year. And if you remember, when we were going through the balance sheet, I told you categorically about every item, and there was a discussion on general reserve that we have transferred 15,000 rupees to general reserve from profit and loss account, which is again a non-cash item. So we have added it back here because it was subtracted. So we have to find the actual profit, actual cash profit. So we have added back rupees 15,000 here. Interim dividend being non-operating item. Interim dividend which was paid out of the profit, out of the operating profit, that is an item of that is an item which belongs to financing activity, but not operating activity. So what we have done here, we have added back this 15,000 as well. And lastly, provision for taxation, rupees 78,000. After adding back all these items, or in technical terms I would say after nullifying the impact of these non-cash, non-operating items, we shall arrive at net profit before tax and extraordinary items of rupees 1,86,000. So my dear learners, this you can alternatively do in the question also, but to avoid any kind of confusion, I have done it in this working note. Now we shall move on to the next point, that is accumulated depreciation account. Still I am running in the working note only. Accumulated depreciation account, it's a credit, it is an account which belongs to the liability side, and liability is always having a credit balance. So on the credit side, the opening balance of rupees 1,50,000 is written. On the debit side, it is closing balance rupees 1,70,000. In question, it is reported that you have charged depreciation of rupees 20,000 on that asset, and whenever your asset is being sold out, the relevant proportion of depreciation is being taken from you can say accumulated depreciation account, or you can say the value of asset need to be reduced by that whenever you are selling. This is the treatment which I wanted to show here in this question specifically. So the property has been sold out, and on that there was a depreciation of rupees 20,000 because property's value was 60,000, and there was a depreciation of 20,000. So we have to show the charge the depreciation from this account. I have passed an entry, accumulated depreciation account debit to fixed assets account. So we have to credit the fixed assets account because the value of asset is now declining. So two fixed assets rupees 20,000 we have written, and we find the balancing figure of rupees 40,000 as an amount which must have been charged from profit and loss account on account of depreciation. So we have written here by profit and loss account, that is the amount of depreciation. Now this 40,000 will be used while calculating the cash flow from operating activities. So what is the purpose of behind preparing this accumulated depreciation account? It is actually having twin objectives. One is that we should know how much money should be your fixed assets account should be credited by how much amount, how much money, and second is how much amount you should take from profit and loss account on account of depreciation. Now the same counter treatment will be there in the fixed assets account. Opening balance we have shown on the debit side, closing balance on the credit side, and then after showing all the values, we found that there is a balancing figure. There is amount you have received as outcome from sales by bank account rupees 30,000, and loss on sale is also reported here rupees 10,000, and balancing figure which comes on the debit side, we shall assume that it must have been a purchase of fixed assets to the extent of rupees 1,60,000. Now after preparing this, last account is trade investment account. after opening this account, posting the value of debit and credit, we found that the balancing figure is 30,000, which is actually an amount which must have been received from the investment, and the value have been transferred to this capital reserve account. Now after going through all this working note, we are all set to prepare statement of cash flow. If we look at statement of cash flow from operating activities, net profit before tax and extraordinary item, which we have calculated just before, is shown here 1,86,000. Now after this, we have to make adjustment for non-cash, non-operating items, where the first item is preliminary expenses, depreciation, and then loss on sale of fixed assets. Now these loss on sale of fixed assets is an item which doesn't belong to the operating category. That is why we have added back. After doing so, we got what? Operating profit before working capital changes, and that comes to be rupees 2,46,000. Then comes adjustment for change in current assets and current liabilities. Any increase in current asset will be subtracted and decrease will be added. So by following that principle, we have taken care of those current assets and liabilities, and after adding and subtracting those values, we have found operating profit after working capital changes, that is 1,49,000. And here comes the role of income tax payment. We have shown income tax paid rupees 88,000, and the resultant value is what? Net cash flow from operating activities. So after making all this adjustment, we are through with the first segment of statement of cash flow. The second is investing activity. Here we have to show the purchase of fixed assets, which we have already worked out in our working note, 1,60,000. Sale of investment rupees 30,000 inflow. Net cash used in investing activity comes to be rupees 1 lakh. And remember, there is a sale of fixed assets also to the extent of 30,000. So we have shown it as inflow. So under investing activity, there is a net cash usage. The value comes in negative. So there is no cash generation. It is used 1 lakh rupees. And eventually we'll move on to financing activity. After showing the payment of dividend, 36,000 proposed dividend of previous year, interim dividend of rupees 15,000 of current year, issue of shares of rupees 1 lakh is an inflow. We have found the net cash generated from financing activity, that is 49,000. Now since we have worked out all three activities, we have to add them, we have to aggregate them to arrive at whether there is a net increase or decrease, and the resultant value is giving me a net increase in cash or cash equivalents, which is 10,000. And here comes the litmus test whether my calculation is correct or not. I will add cash and cash equivalents at the beginning, which was 30,000, and in an automatic manner I have got the cash and cash equivalent at the end, that is rupees 40,000 rupees. So in this way, my dear learners, we have learned how to make treatment, how to make provision for the interim dividend and accumulated depreciation. I hope you must have understood with the help of this numerical problem how to deal with these two important items of statement of cash flow. With this, I am ending today's lecture. Thank you so much.